Well, the administration can play semantics for now and claim that we are not in a recession, but the economy is receding. The Fed clearly is worried they need drastic measures to keep inflation from exploding further before the approaching red wave in November's midterms. Let's bring in our panel to break down what this all means. We have former member of British Parliament and former advisor to Margaret Thatcher, John Brown, and business and market analyst Seth Denson. Gentlemen, welcome to you both.
Thank you.
Good to see you.
Well, John, some investors are expecting the Fed will raise the high end of its target range to at least 3.75% by the end of the year. But Jerome Powell, he did indicate another rate hike could come possibly as early as September. He wouldn't confirm. He said it's uncertain to what effect this will have on the economy. Listen.
It's very hard to say with any confidence in normal times. In normal times, what the economy is going to be doing in 6 or 12 months, because there's so much uncertainty. These are not normal times. There's significantly more uncertainty now about the path ahead than I think there ordinarily is, and ordinarily it's quite high.
So, John, rates have already been raised 2 points in 4 months to tamp down inflation. Is this just a case of killing the patient to cure the disease here?
Well, the Fed is right. These are abnormal times. Late last year, United States interests were the lowest in recorded history. That's not 50 years or even 500, 5,000 years till Mesopotamian interest rates. So we've had years of U.S. interest rates being negative net of inflation, heralding a huge debt boom where the borrowers were paid by the lenders and therefore malinvestment. And this is coming unwound. Today, we see the Fed adopting 1%, as you said, was expected, but by 0.75% to make a total of 2.25%. Well, with 9.1% inflation, that's still negative 6 7/8%. And it showed, in my view, that the Fed is very worried because it's seen the figures for tomorrow, the GDP recession figures, but chooses to lie and mislead about it. And the figures are recession. And they're worried about forcing a recession into a deep recession or even a depression. So with the Fed easing up on fighting inflation as they're doing now, we are headed for hyperinflation. And the result will be a deep recession with it. In other words, stagflation, the very worst of economic woes, heralding economic chaos and great suffering. And I believe a rise in social unrest.
Seth, I'd like to get your reaction. Do you agree?
Yeah, I tend to agree with John on that, and specifically on the stagflation component, right? Stagflation is effectively when the economy stops growing, but inflation continues on. And that's what we're seeing. And I think that tomorrow, when those numbers come out on GDP growth, listen, this administration has tried to change a lot of definitions over the past couple of years. Specifically, now they're targeting economic definitions. Yes, we are in a recession. I am sorry. That is the reality of things. And that's what we're grasping with. If you look at where the Treasury is, specifically the 10-year Treasury, it is inverted to the 2-year, meaning that you can get more money out of a 2-year than a 10-year loan on a Treasury bond. What does that mean? Investors recognize that long-term this economy is going to suffer, and eventually the Fed will have to lower rates to fix that. The challenge we have, though, is that our economy and the global economy, to John's point, I think, even though he says it with that British accent, so it sounds a lot smarter than me, is that our economy and the global economy has gotten too addicted to low-cost money, effectively free money. Yeah. And we're going to have to rid ourselves of that. We are way past the ounce of prevention being better than the pound of cure.
I keep saying that the Democrats have what I call recession. They're recession deniers. They call Republicans climate deniers. I think the Democrats are recession deniers. But Seth, I want to just go back to you for 1 second. The market responded favorably to today's news. We saw the Dow Jones. It was up 400 points. The S&P 500 gained was up more than 2.5%. And NASDAQ also jumped 4%. I mean, what is your expectation? Is this a one-day response, or do you think the market's going to head in the right direction?
You know, Mercedes, that's a great question. I got out of predicting this market a while ago because it just doesn't make any sense. This market specifically doesn't like surprises. Investors expected the Fed to raise 0.75 point. That's exactly what the Fed did, and the market reacted appropriately. Tomorrow, I think we're going to get bad GDP numbers, but don't expect the investors to not be surprised by that. Yet they will still punish us. I think we see a down market. Matter of fact, futures, I was just looking at them, down already.
John, curious what this means for the housing market. I mean, home buyers, home sellers, what are they in for?
Well, I think generally throughout the United States and large parts of the world, the housing market prices are going to plummet downwards. But in special areas like Texas, like Florida, and particularly the Gold Coast of Florida, which is a very special area, people are flooding into these areas, driving prices right up. So I think in a place like Florida, you may say a dip or a cautionary hold, pause, or a dip in prices, but nothing like the devastation nationwide, particularly in those states that have been unkind to capital and massive breakdowns in law and order, and people are fleeing those cities at an alarming rate into Texas and Florida. And so I think they've been two different things: plummeting worldwide, absolute plummet in the rest of America in those blue states, and dipping slightly in the red states, particularly Texas and Florida, but then revising as people flood in. Even corporations are flooding. We've just had two big corporations coming into Palm Beach, West Palm Beach rather. And that means a lot of people, relatively highly paid people, moving in, wanting housing.
Well, I think Jen and I are ready to...
I think that Seth, although not wearing glasses, is very perceptive. I agree with every word he said.
Well, I got to say, I think Jen and I are ready to buy a property in Florida.
Ready to go.
Let me tell you.
Hey, come to Texas, Seth, y'all. Come on down.
Oh, no, I'm a Floridian girl. No way. Although we do have CPAC Texas next week, which is going to be very exciting. But real quick here, Seth. So here we've got the fact that, you know, not only the Democrats, they don't even know how to define what a woman is. And they clearly don't know how to define what a recession is, because you had the White House again today. They reiterated their definition that 2 negative quarters is not a recession, possibly forecasting bad news tomorrow. I mean, that's my guess. That's usually what you hear in the White House. Let's take a listen.
The textbook definition of recession is not 2 negative quarters of GDP. We have a strong labor market. We have business that's investing. We have consumers that are also very much, investing and purchasing. That is incredibly important. We have 3.6 unemployment. You do not see that in a pre-recession, and you do not see that in a recession.
You got to wonder if they're using a Marxist textbook to define recession. But wouldn't you say, Seth, that the job market growth is artificially inflated due to all of the layoffs in COVID? Or they didn't actually create these jobs, and historical metrics, I mean, they don't really apply here. I mean, or do they?
No, they don't. I mean, right now what we're seeing in the job growth is a bounce. We're bouncing back from the overall layoffs. And you know, specifically, I think one of the clips I heard you say was from one of the executives over at KPMG who said, yeah, she thinks that jobs will come next. And I say that too. I've said that for some time, that this jobs market is holding on by a thread, and that will be the last to go, but it will go. And we're already hearing employers talking about that. As far as the textbook definition of recession, I was taught a long time ago, you don't argue with stupid, and that's just stupid. So I don't know how to argue with it other than to say that it's just wrong.
Well, Seth Denson, John Brown, a great panel to kick off the show tonight. Thank you both for joining us.
Thank you very much.